were you, Champak? I was waiting for you for a long time. You were supposed to come in the morning, now it's evening. Come now, let's go.
Wait at least. Let me catch a breath. I have just arrived.
Huh? Where are you coming from? We were supposed to hang out today.
Well, I had gone home for some urgent work, but got caught in the traffic on the way. In fact, my home is towards Delhi and the highway is being constructed there. There are huge machines and hence the jam.
Okay, leave it. Just tell me whether we will hang out today or not.
Yeah, why not? Let's go after the budget is over. But I was wondering about one thing. The companies that make these machines must be earning impressively, right?
Well, yeah, obviously.
So this time, tell me about one such company that is manufacturing these machines and which can be good bet for long-term investment.
Yeah, you spilled water over the hangout plan. So let's discuss about Cummins India Limited, which is also known as CIL. Cummins India is an engineering firm based in Pune, which began operations in 1962 as a partnership between Kirloskar and the US-based Cummins. In 1997, Cummins acquired Kirlokar's stake, increasing its ownership to 51%. CIL is the largest engine manufacturing company in India, with 8 units in Maharashtra and Gujarat. The company has a strong distribution network and the ability to customize products from its parent company, Cummins, for its customers.
Cummins India Limited's business is divided into 3 units. The first is the engine business, which serves the heavy, medium, and light-duty engines along with the construction and compressor markets. The second is the power systems business, catering to the mining, marine, rail, oil and gas, defense, and power generation sectors. And the third segment is distribution. From diesel and natural gas to the latest hybrid, battery electric, and fuel cell options, this group manufactures various types of engines. Moreover, for all types of EV and power sectors, this group also prepares hydrogen fuel cell power modules and compositions. With a 40% market share in the diesel engines or gensets industry, Cummins India Limited is a leading manufacturer of diesel engines and power generator sets. The company has benefited from its leadership position in improving its margins. Increased government spending on infrastructure, investments related to PLI, and increased demand for data centers due to 5G and cloud-based data storage are expected to enhance the company's order book position. With increasing investments in infrastructure, data centers, and commercial realty, there is an expectation of increased demand for backup power.
CIL is focusing heavily on launching new products and innovation. In FY21, the company launched 7 new products in the power generation segment. Additionally, 7 new products were introduced for the rail, mining, marine, construction and pump segments in the industrial business, along with 3 new products in the distribution segment to support the Indian Railways in achieving 100% electrification of its broad gauge network. CIL ensured a continuous supply of diesel electric tower cars, better known as DETC.
They have 8 facilities located in Maharashtra and Gujarat. And the best part for Cummins is that it's got a well-diversified product base which caters to almost all the core infrastructure sectors, the shipping sector, the defense sector, as well as the mining, as well as the automotive sector. Now, coming to the future product basket, they have also developed the hydrogen, powered engines, which I believe after the elections, once the government announces a proper hydrogen policy, that will definitely benefit, large players like Cummins. Most importantly, Cummins enjoys the benefit of its collaborator Cummins US, where it gets access to technology for the new products and development on an ongoing basis. Therefore, we believe that, as India grows, the GDP grows, we are going to see a lot of, investments in power as well as transmission, as well as other core sectors like marine, shipping, defense, and broad, private capex. So this is all going to add to the revenue and the potential for the company going forward. And, entry barriers in this business are extremely very hard. It's not very easy to find, engine manufacturers coming and setting up shop overnight. It takes years of time. And again, annual maintenance service the serviceability of these engines is also another key success factor. So I think in all these respects, Cummins represents a very solid capex play in the Indian context, which is going to grow over the next say 2 to 3 years on the back of a rising GDP for the country and a growing private as well as public capex across the economy.
Wow! But what about its growth and its plan for expansion?
You are getting excited about this company. So now, listen carefully.
CIL has an edge over its rival companies due to its strong parentage and technical capabilities. The company plans to expand its product portfolio in the long run through entries into telematics, electrification, renewable energy, alternative fuels, and advanced analytics. It is also making significant investments in the EV economy and owns several battery manufacturing companies. And not just that, at the global level too, this company is making significant investments in hydrogen technology. CIL intends to manufacture many products related to its hydrogen technology locally and plans to offer these products as demand increases. With the focus on clean energy technology, especially hydrogen technology, this company will achieve higher margins in the long run. Moreover, the Indian government has a significant focus on the infrastructure sector because it aims to create a $5 trillion economy by financial year 2025. Therefore, to sustain growth until 2030, an investment of $4.5 trillion will be required in this sector. During financial year 20 to financial year 25, proposed expenditures in the infrastructure sector in India amounted to Rs 111 lakh crore, with energy accounting for 24%, roads for 18%, urban economy for 17%, and railways for 12% of the total, indicating that 71% of the proposed investment will be in the sectors that are being targeted by CIL.
Great! The company's future looks promising. But what about risks for the company?
Yeah, I will give you 360-degree perspective for this company. Although the company's business is quite strong, in the coming years, diesel and gas-powered generation assets will phase out. Hence, the company needs to focus on continuously innovating new products to sustain its business, which incurs considerable expenses. Additionally, CIL pay its parent company a royalty equivalent to nearly 1.6% of total sales, which could increase in the future, potentially putting pressure on profits.
See, the biggest negative is if there is a slowdown in government expenditure, if there is a slowdown in private capex, and if there is a big recession across the corporate sector. Now, this is something which is not possible, at least in the very near term. But Cummins has always underperformed, in times when there has been a slowdown in industrial activity, a slowdown in industrial capex, and when the global markets also have shrunk. Now, as far as global markets are concerned, Cummins largely depends on the US and the European markets. If there is a slowdown, that could impact their export markets. But as far as the domestic markets are concerned, we believe the next 2 years, I think Indian economy is yet to see its full potential, get reflected. So I think in the very near term, not many risk factors, but yes, there could be, some risk factors in the case that if raw material prices increase sharply, then there could be some impact on the margins. But yes, demand will still continue to grow.
I understood about company's business, but what about its financial performance?
Alright, let's look into it.
The estimated sales for the company are Rs 8,300 crores in FY24, Rs 9,500 crores in FY25, and Rs 10,139 crores in FY26. Meanwhile, the anticipated profits are Rs 1,350 crores in FY24, Rs 1,500 crores in FY25, and Rs 1,750 crores in FY26. Based on these figures, the expected earning per share or EPS are Rs 49 in FY24, Rs 55 in FY25, and Rs 63 in FY26. Considering its closing price of Rs 2,170 on January 24th, as per FY26 earnings, its PE or price to earnings is around 34 times.
Okay, now also tell me about share performance. What are the targets recommended by experts?
Your excitement level for this company is through the roof. I can understand that. So, listen carefully then. Even after the phase out of diesel and gas power generation assets, this company will be in a position to offer various types of products. Due to its parentage with Cummins Inc. from the US, the company has access to advanced technologies in the power technology business. The Cummins Group has invested several years in innovating these alternate technologies and mastering them, which will emerge as primary needs for energy in the future. As India tightens its emission-related regulations, CIL will benefit from launching efficient products quickly compared to competitors because the company has access to superior technology and its parent company, Cummins, has already implemented these regulations in Europe and the US.
CIL is a well-established company that earns a good profit and holds a monopoly position on its important products. As a result, the company's operating cash flows are strong and it has a considerable amount of cash in hand. For these reasons, there is a likelihood of the stock receiving a premium valuation multiple of 40 to 45 times. According to experts, for time horizon of 18 months, you can buy this share with the target price of Rs 2,454.
We believe that Cummins India is expected to show robust growth over the next 2 years, starting FY24 onwards. In FY24, we are looking at a profit of around 1350 crores, which we believe has got all the potential to touch 1750 crores by FY26. Most importantly, with a new product range, with new access to technology, and now with hydrogen being the new fuel of the future, we believe that Cummins could be one of the key beneficiaries for this initiative by the government. And with corporate capex going very strongly, government also encouraging a lot of infrastructure projects, we believe that Cummins can comfortably show a earnings growth of 18 to 19% over the next 2 years. The stock has always enjoyed premium valuations of 36 to 38 times. We believe these premium valuations will continue considering that its MNC parent pedigree, secondly, a debt-free balance sheet, and most importantly, a very good distribution record with the shareholders, and obviously a very positive outlook on the private capex. So our sense is that over the next 18 months, one could expect a reasonable good risk reward and a target price of around 2450. So investors should definitely look at accumulating this share for the long term.
This company is really good. But how do you find such diamonds from the dust?